Hey there, this week's topic is mistakes people make when applying for a mortgage and how to avoid them. So basically, there's three big mistakes that make up about 95% of the issues that we run into, the conditions we get from underwriters, and quite frankly, just about all of the stress and frustration that my clients have during the loan process are very often 100% avoidable. So want to dive right into that. Number one is not planning ahead, right? So the issue here is it's truly the number one source of frustration and stress is not getting ready before you decide to buy. So several months before you buy, there's several things you want to keep in mind, right? One is your money. Where the money is coming from for a down payment. Some people have it in multiple accounts. Some people have several accounts, whether it be investments, 401k, IRA, some savings. Maybe it's some's coming from mom and dad. Maybe some's under your mattress. So where that source is coming from, it's a good idea to get that money consolidated. So moving it all into the one account that you want to take it out of, consolidating it later just creates all this extra paper trail. So instead of getting one bank statement or like 2 or 3 months worth of bank statements, usually 2 months worth of bank statements from one account, I've got to get months worth of bank statements from sometimes multiple accounts. Very often, if it's coming from a relative and the money is not in the account prior to the 2 months that we have to verify, then we have to paper trail that. If it's coming from a withdrawal from someplace, we have to paper trail that. And then we're chasing our tail, right? So moving that money or consolidating it and planning ahead on that just can solve so much extra paperwork. And then, when we're asking for a bank statement, then all of a sudden, oh, well, what's this withdrawal or what's this deposit? You just go down that rabbit hole. So planning ahead a little bit on that can save a ton of paperwork and frustration on that, because ultimately we don't want to ask. We don't want to know why. The reason why they ask for that kind of stuff is to make sure that there's not a liability that we're missing, and a withdrawal that's coming out of the account that looks odd. We're going to ask. It's just to protect ourselves. So I'd rather not ask for the paperwork to begin with, and then I don't need to ask. Problem solved. So that's a big one. Also, limiting the large deposits. So if there's a large deposit that's not payroll that goes into your account, we're going to ask that paper trail. So we have to do what's called source or season. So if it's sourced, we have to prove where it came from. So we have to paper trail it. But if it's seasoned, which means we have 2 months most recent bank statements and the deposit doesn't show on those statements, I'm not going to ask where it came from. So that eliminates the need to document a gift. If it's money that's under your mattress that you've been saving, say in a safe, I don't need to know where that came from because very often we can't use that at all. But if you were to deposit it a couple months prior and it sits in your account, we don't ask. So there you go. So source or season on those deposits, planning ahead helps a ton. So don't close accounts, right? Some people think, well, if I have all this available credit, the bank's going to look at it as like it's a negative, that somehow I'm going to higher risk. But the reality is that's just crazy. We don't look at it that way. And actually closing accounts, reducing your limits, that type of thing can negatively impact your scores. And if you're doing that right before you buy, that could be really bad because you may not have time to recover depending on how far or how long you have to get through this process. So that really matters. So don't close anything. Don't reduce your limits. Don't. If we have collections, don't pay those off. Very often people will think, well, I have this small medical collection I want to get taken care of. It's been out there for a little while. Let's take care of it. But what you don't realize is if you pay a small collection off, especially if it's old, it shows up as new collection activity. And the credit scores can't tell the difference between good collection activity and bad collection activity. They just see that it's recent collection activity and your scores can drop. So you could be doing something positive, which is eliminating a negative mark on your credit report, and it actually drop your scores temporarily. So a lot of people don't know that. So don't be paying off collections, don't close accounts, don't reduce limits. That's a big one. Also, planning ahead, and if there's any job moves, right? If you're going to transfer to a new position, especially if it pays differently, right? You want to make sure that if you are a 40-hour a week person, don't take any time off. We need pay stubs to all reflect 40 hours. Because if we have somebody who consistently gets 40 hours, but if I need a 30 days worth of pay stubs and one of those pay stubs has less than 40 hours, there's a chance that they make us do an average, which they may not be fair to you, right? But if they see that it's variable, they may make us do it. So plan ahead. No changes to your compensation. Don't go on commission. Don't reduce your overtime. If you're averaging overtime, add overtime. Don't take it away. All right. Taking time off. All right. Don't take a vacation in the middle of trying to buy a house. Right. I can't tell you how often that happens. It does. That can be a problem. So planning ahead a little bit, not making any changes to your job, and then be organized. Right. So get your paperwork together. Get your bank statements together. Get your if your bank statement says 1 of 5 pages and the 5th page is just blank, but it says 1 of 5, I need all 5, right? I can't tell you how often I get 1 page and it's the summary page. Sure, it gives me the basic information I need, but if it says 1 of 5 on there, I'm going to need all 5, right? And some people throw them away. They throw their pay stubs away, throw their W-2s, once they do their tax returns. Save that stuff, right? Because we're going to ask for it. If you're organized and you save that paperwork, your process is going to go so much smoother. So being prepared is the number one mistake that people make, is being not prepared. So going into it, you get a little bit of forethought, 90, 120 days out from wanting to actually move. I promise you it's going to save so much stress and frustration for you. It'll reduce the amount of paperwork we need to get from you dramatically. So mistake number 2 kind of dovetails on this, kind of the be prepared part, is getting pre-approved. Now, I'm saving it as its own mistake because it is such a big one. You'll hear from realtors, right? Real estate agents, mortgage people, they're on commission, right? So if we don't close the transaction for you and get you what you want, we don't get paid, right? So realtors very often won't even show you a house if you're not pre-approved. So the idea of, I'll get pre-approved when I find a house doesn't really work. And if you do have a realtor that'll go out and show you homes without being pre-approved, they're not doing you any favors, honestly. Because what happens if you find a house invariably on a Friday night and they're accepting offers and you have to get your offer in right away? I'm sorry, you're SOL in most cases. Those of us in the industry, we have families and we have lives, and it's hard to drop everything at 8 o'clock on a Friday night or on a Sunday night to get somebody pre-approved when they knew all week that they were going out looking for homes, but yet it wasn't important enough to get pre-approved. And now all of a sudden it's hair on fire rush. And I'm sorry, sometimes the answer is, I can't help you. And it's not that we're trying to be difficult. It's just that, it's what we do for a living. And being prepared and being proactive is your job, right? Because you're the one who loses out. I can't tell you how many people that I've seen lose out on homes. And a lot of realtors have the take on it as, well, sometimes a buyer just has to lose a house or two before they get serious. So just don't be that guy, right? Get pre-approved, right? And it's honestly, if you're a seller, do you really want people coming through your house that aren't serious enough to get pre-approved prior to going to your house? You don't want just looky-loos going through your house. You want serious buyers only, right? If it's your stuff, it's your family's belongings, you have pets maybe. You don't want just anybody walking through just because they're curious, right? You want qualified buyers. So be a qualified buyer if you're going to go out and look and get serious about buying a house. So really, it's not about whether you qualify or not. It's about being prepared, being able to move quickly if you find something. Believe me, it only takes once or twice of losing a house because you weren't prepared to learn that lesson. And why not learn the lesson from other people, right? So that's number 2, be pre-approved. So number 3 is don't mislead, right? And I'm sugarcoating it. It's don't lie in a lot of cases. Sometimes it's not really lying. Sometimes it's just something you don't know. But misleading, that means don't overstate, like say assets or income. Don't understate, say like debts or liabilities. Don't overstate hours or employment history. There's all kinds of things that go into this, because or omitting things is a big one, right? Leaving stuff out, right? Job gaps, things like that. A big one that we run into, and it's actually the most pervasive fraud in our industry, is people saying they're going to live there and they're not, right? Or something along those lines, right? That's a felony. But it's, back in the day, a long time ago, a lot of people did it. And so a lot of people don't know that that's a big issue these days, and they're watching for it. So omitting things or misleading in any way is just a big train wreck, right? Because, our job is to verify these things and go through this process, right? We're good at it, right? Then the lenders are really good at it. They have software that checks, for properties owned in other states, and there's not much they miss, right? And the reality is it's going to come up, and it's going to make us both look bad at best. And at worst, it could create liability. You could lose your earnest money. It's just, and the timing's never good, right? It always is at the last second, and it creates tons of stress and problems, and everybody's mad, and it's just not good. So, the thing to remember is I'm your advocate. So you want to tell me everything and then let me structure the loan and present it to the lender in the best possible way to get you approved, to have the process go smooth, and to get you what you want, right? Because I'm going to find out eventually anyway. So you might as well just tell me everything up front, right? Because I'm not going to tell you no. My job is to structure it and to get you the loan that fits you. And so knowing everything allows me to do my job. So don't mislead, don't omit, don't overstate, understate. You get the gist, right? So that's a big one. So kind of to recap here a little bit, we want to look good. We want to close the loan on time. We want you to get you what you want. So remember, I'm your advocate. And to recap the things that you need to do or don't do is don't move around money, right? Or if you do it 90 days out from when you want to buy, right? So we can have two statements where there's no, money moving around. There's less paperwork for everyone. So no applying for new credit. And that goes all the way through closing, right? Because we're looking and we're watching for credit inquiries and big changes in credit card balances, new car loans, that type of stuff. We're watching all the way to closing, to recording, right? You're never out of the woods. So don't apply for credit. Don't close accounts. Don't reduce limits. Don't pay collections. Job changes, don't make them if you can help it, unless it's like a raise or it's a big improvement. But if it's something you can control, don't do that. Don't reduce your hours, that type of thing, overtime, whatnot. We want to stay consistent on that. Try not to plan vacations around when you want to buy if you can help it. Also, organize. Be organized. Save your paperwork, right? Save your bank statements. Put it in a file. Have access to it. It's going to make your life so much easier. I can't tell you how many times I deal with clients and they're like, well, I don't get pay stubs. Well, by law, every employer has to provide them. So it's a good idea to find out how to get them if you don't have them readily. Just be organized, right? And be ready to move quickly and be thorough, right? So like I said,